Hi everyone, thank you very much for joining us on this final episode of 2021 on Startup Talks. This is episode 45, and we've saved the best for last to speak about financial services. The biggest disruption around the world is being witnessed in financial services, and fintech startups are a hot cake for investments. To talk about some aspects from the space, we are joined by Safwan Zaheer. Safwan is a financial services executive with 20 years of experience working for global management consulting firms, Fortune 50 brands, and fintech startups. He is known to build, shape, and scale digital banking businesses, some of which have experienced record growth. Most recently, he was the executive vice president and GM at a fintech corporation where he grew the uh, POS, point of sale lending, and BNPL business by three times. He was also behind the team that launched the neobank for T-Mobile in the US. In the past, he has led the fintech consulting practice at KPMG, advising global clients on strategy, product launch, and growth initiatives. Safwan is also a thought leader in the financial services space, and his views have been published in the American Banker, the Financial Brand, Payments, etc. He currently also serves on the board of several global fintech startups. I'm glad to host him for a talk today. It should be a good learning experience for me and for everybody who sees this. So, Safwan, thank you very much for being here on Startup Talks. How are you doing? How's Christmas holiday going there with you?
Well, and thank you very much for having me. Thank you for that introduction. I would say I'm still sort of weaving and sort of learning and experiencing some of the excitements that are happening in the market. So I'm certainly in that learning zone. But thank you for that introduction.
You've done
Um,
justice with the
and
intro.
yeah, well, but also wanted to acknowledge some of the efforts that you are doing in Pakistan. Specifically with your startup talks. I've listened to a few, and you're certainly bringing some valuable information to the masses in Pakistan, which is a commendable effort. So thank you for doing that. Thank you for doing that as well. As far as Christmas, it's a festive season. Everyone's just relaxing. The economic activity somewhat shuts down in the U.S. during the last week of the year, and it's just relaxing. I don't celebrate Christmas, as you're aware, but I do make use of the opportunity and sort of take time to relax and spend time with the family and sort of do some shopping activities here and there.
Uh-huh. So that's great. Thank you for your kind words that you extended for Startup Talks. I'm very grateful. It's good to have some appreciation from people, and it's for the benefit of the masses. I mean, whoever has some iota to take from it, I think it's a job well done. So, Safwan, coming back to the hot topic, it's a global hot topic, right? Even in Pakistan, in all emerging markets, the disruption that the financial sector is experiencing, and for VC firms as well, fintechs are the go-to is the go-to sector for investments. So, how has the fintech industry evolved, in your opinion, over time, and where do you think it's heading, especially in the developed world?
Yeah, well, it's an exciting time for the industry. I would say we are still in the early stages and phases of fintech, even in the developed world.
Mhm.
But before I share my opinion around where we are heading and what the evolution has been, let me maybe take some time to sort of define what fintech is, because there's a lot of buzz and there's a lot of there's a lot of confusion, for a lack of a better word, what fintech is. Is it an app? Is
Mhm.
it a digital bank? Is it a payment solution? etc. So fintech, in my experience, is not any one of these. Rather, it's an ecosystem of banks, venture-backed startups, small firms, technology firms, and even retail firms these days that are using technology. They're using new innovations around business and operating models. They're using techniques such as design thinking and customer experience design to sort of build more relevant products to make financial experiences and products much more consumable for consumers. And these ecosystem of players are essentially finding a gap and or an underserved segment in the market and are targeting them with financial services, either by providing access to those products or making products much more cheaper, or essentially using the distribution channel through the internet and digital channel to essentially make financial services deliverable to areas that would not normally have been able to consume the types of financial products without the fintech revolution. So in the developed world, we're in the, I say, third phase of fintech evolution. First one was essentially where these fintech ventures popped up, and they had this bold mission to take out banks, and that's what was happening about 10, 12 years back. These startups wanted to essentially change the financial services ecosystem, wanted to sort of take out the banks, completely change not only the business model but also how they would deliver financial services to consumers. And it was a very interesting era in the developed world, in particular in the US, with new payment solutions, new lending solutions, primarily in that era. And we saw a lot of activities around big banks investing in startups, even buying them out, but then they didn't know what to do about them. Anyways, we were in that phase, and then that phase turned into the second phase, which was more around partnerships with the fintech players and using them to essentially enhance their traditional banking products. And I term them as Fintegration era. That was the phase two. Integration was you want to partner with a fintech that might have built a data analytics platform to mine insights and deliver a better product, and the banks wanted to use that platform and sort of enhance the products. And then the third phase, which we are currently in, I would actually punctuate that the first and the second phase led to quite a bit of unbundling of financial services products. What I mean by that is customers, consumers, and even businesses could get a bank account from player A, could get a payments payment services through a player B, could get a investment account through a player C, and sort of build their own operating system, for lack of a better word, to sort of solve their banking needs. So the third era, which is where we are, I strongly believe, is the embedded finance era, or the banking as a service era, which is widely catering to the idea that every company is going to become a fintech company, and that doesn't mean that every company is going to be a bank. It only means that in order to build customer retention and loyalty and grow their businesses, companies are going to be integrating banking products as part of their core product customer value prop. So, for example, if you're in an e-commerce marketplace where you have sellers and you have buyers, sellers will be able to essentially, within that marketplace, get a loan if they have to, and then purchase a product, right? If you have sellers, on the other hand, sellers will be able to establish a business account right there instead of like going to a big bank and establishing an account and sort of fulfill whatever needs they have in the hopes of sort of containing those customers in that ecosystem. So we're certainly there. As I stated earlier, and to wrap up this question, we're still in the early phases of the fintech revolution, we have many decades, if not years ahead, where fintech is going to play a very transformative role in transforming markets and economies.
Mm-hmm. So, in your opinion, when you are talking about you spoke about the developed world, when you talk about emerging markets like Pakistan, right? Of course, you've got connections back in Pakistan too, but being a financial services expert, how has fintech evolved in emerging markets, especially in case and point reference to Pakistan?
So as you stated, I'm a person of Pakistani descent. I've been in the U.S. for now 26 years, but I do have connections still in Pakistan. Um, Pakistan, as I see it, Pakistan is ripe for fintech revolution. There's so many inherent market problems and gaps that, as you know it well as a consumer in Pakistan, that traditional players, whether it be a bank or even a retailer or a merchant, is just not fulfilling the needs for customers and even small businesses. And that's the promise of fintech. So if you think about just the sheer potential, the gaps in the market, the customer base, the rise of the Gen Zs and millennials, the tremendous penetration of mobile phones and internet and digital devices, I think these are just ripe for fintech services to flourish. And it's not just me, saying words. I mean, we're seeing some proofs in the market, right? There's some proofs in the market that we're seeing with some multi-million-dollar investments pouring into the country within a few startups. Some of your startups have reached the unicorn milestone, which is sort of a general valuation number of $1 billion, as you're aware. And we're just we're seeing some great activity already happening in Pakistan that just speaks to the tremendous growth potential of fintech in Pakistan. I mean, unfortunately, Pakistan is a little late to the game, and that's fine. It's better to be late than never. We just see one of our neighbors, India, and some of the startups that have achieve some record success. I mean, I think a similar thing can happen in Pakistan.
Uh-huh. Okay. I know that some startups are, especially fintech startup, there's one by the name of Tag that is being incubated at Y Combinator as well. Now, fintech, the word, it's actually it has quite broad a meaning, right? You've got digital banking, then you've got payment solutions. Payment solutions are very popular in Pakistan. There are quite a few companies doing that. Then there is neo banking as well. Can you help clarify the clutter between all these kinds of branches of fintech?
Absolutely happy to, and that's a great question you ask, Temur. As I stated earlier on, there's even in the developed world here, there's quite a bit of confusion as to what is fintech. And I had mentioned earlier that fintech is actually not one particular sub-segment of financial services. It's actually a way to deliver and consume financial services products, right? So all of these three things that you mentioned, digital banking, neobanks, and payment solutions, are part of the broader banking products, part of the product. And all of them have been disrupted, for lack of a better word, by fintech. So what is digital banking? So digital banking, in my view, is use of digital channels to, such as your devices, your internet, to deliver market use financial services products.
Yeah.
And the term digital banking is sort of a way to say that you have banking that is gradually moving more towards digital and digital channels, but it is still complementing the physical channel. It's a combination of physical and digital. So that's where the term digital banking means. The term is mostly being used in the context of big banks, talking about fintech and digital financial services, right? Because despite what fintech ventures and businesses and startups say that they want to take out the banks and it's all digital and so on and so forth, you have a segment of customers that do want to walk into a branch, that they do want to talk to a live person at a bank, just because the greatest asset any bank has is trust. People want to have a trustworthy institution that can hold their lifelong earnings and money and gold and what have you. So the concept is where you have digital channels and fintech-like product experiences that are being complemented to the physical retail channel. The concept of neobank is just completely opposite, in a way that there is no retail branch, there's no physical branch. You can do your banking on your smartphone. There, you can interact with a agent that could be a sort of a chatbot to solve your solve your everyday need. If you have any questions, you can open up an account in a matter of minutes. You can be generated a virtual card and be shipped a physical card if there's one. Just all of that experience is through your smartphone and through your digital channel. And then you mentioned well, pause here, and then it seems like that, for instance, if I understand them correctly, they're a neobank, right? So they would be ones that would compete with, at least on the global level, with a Revolut, a Monzo, a Chime in the US, a VAR in the US, etc. Right? And then there are a few in Middle East as well that I know that are sort of generating some scale in the market. And then payment solutions, so payment is a huge, huge space. There's the value chain of payments that ranges from payment tender types, which are the credit cards and gift cards and debit cards and sort of form of payments that are being innovated by use of new technology and digitization. Then there's the acquiring and processing piece of it. Those are players that are involved in settling with the networks and with the issuers, which I'll talk in a moment. So there's that innovation happening there. And then there's the network, which is the Visa, MasterCard, Discover, American Express. And then there are the banks, who are typically the issuers of credit on a credit and debit card. So the payment ecosystem is a lot of these activities where you hear about digital wallets, where you have a debit, where you can actually apply for a debit card that links to an account, and the debit card can be a virtual and a physical, and customers can use it to pay at a merchant, right? I think a startup called SadaPay is somewhat doing that, right, in Pakistan. So that's one type of payment solution. And then there's even BNPL, which is buy now, pay later. This whole activity and buzz these days, even in the developed world, and certainly some chatter in Pakistan as well. That is a form of payment as well. because it helps customers transact at a point of sale. That's also, even though it's a loan, and it is a loan, but it actually acts as a checkout mechanism, and it's slowly emerging as a payment tender type.
Uh, BNPL is would have been part of that question, but I took it out on purpose because BNPL, it's kind of like all the rage around the world is around buy now pay later services. Um,
Yeah.
you, you also managed BNPL business at a fintech lender, so obviously you have first-hand knowledge about it. And I also read one of your articles, The Dark Side of BNPL. So I know what BNPL is all about extending credit services and consumers paying off in a couple of months. Um, I would definitely like you to touch on the dark side of BNPL, but how is BNPL going to drive the whole fintech space altogether, in your opinion?
Mm. Yes. At a surface level, right? So I did write this article. It was a bit controversial, but I think as business executives and as startup entrepreneurs, you ought to be cognizant of both the merits and demerits of any product, right? Because if you are aware, you are able to build a better product and a better experience, right? Let's talk about some of the benefits of BNPL, right? And then I'll talk to you about as I term it, the dark side of BNPL, which is actually a factual thing. And we see quite a bit of quite a bit of movement by some of the emerging BNPL players to correct that. First of all, BNPL, why is it growing? I'll talk from a developed market perspective, and then we can maybe we can tee it up with why it's even growing in Pakistan. In the developed market, BNPL is actually a new way, a new terminology to a very old product that even existed in the US. It was either it was called either the layaway program or a point of sale credit or a point of sale loan, etc. But nevertheless, let's talk about the reemergence and reincarnation of point of sale loan, which is BNPL. So BNPL is a much better form of credit. Why is it much better? Because it is more transparent. It is much more convenient, and it gives the customers ability to pay off typically in 4 to 6 installments and spread their payments amount at 0% interest. Customers do have the ability to sort of extend that, which would then convert that BNPL into an installment loan. So it's a much better form of credit compared with a credit card.
Yeah.
The problem with a credit card is the business model of credit card hedges on revolving balance. The more you revolve, the more money the banks make, and the participants in that ecosystem make. So their incentives are not aligned for customers to pay off their balance, right? So this type of credit started to compel millennials and younger generations, Gen Ys, and Gen Xs rather, to use BNPL to buy everyday products, and sort of that's one of the proposition. The other one is the way BNPL is structured, that it's deeply integrated in the customer shopping and buying journey. So customers can shop, buy, and at a point of sale transaction, they can actually quickly sign up for a loan and transact. And that's why BNPL is even though people talk about it as a credit product, it is now, or rather as a lending product, it is actually competing with the MasterCards and the Visas, because it is and PayPal's of the world, in the US at least, from a payment tender type. So it's convenient, it's deeply integrated into the shopping and buying journey, and it's much more valuable for merchants. It helps increase conversion rates, and it helps them increase their average order value by 20 to 30%. The conversion rates, some of the values, some of the numbers I've seen can be as high as 85%, which is huge for a merchant, right? One of the main issues with any merchant is people most of the time put items in a shopping cart because they want it, they like it, etc., but they don't have credit, right? Even though they might have a credit card. A BNPL enables customers to sort of split their cost at 0%. And to that point, another benefit of BNPL is it helps customer manage their cash flows, right? So you can manage your cash flows. And I do believe that BNPL now is also influencing customer purchase decisions. So Klarna, what they're doing is they have a shopping app. Customers can view products if they like it, put it in their cart, and then Klarna uses that as a form of data around customers to sort of promote other products, to essentially push customers from that early discovery and shopping phase to checkout. Anyway, as far as the dark side, so one of the greatest, not demerits, but the dark side is that largely these BNPL players that you hear about are very unprofitable. Specifically, at least you may have heard of players like Affirm and Klarna, which I just mentioned, and Cesar and Zip, etc. They're largely unprofitable because these $400-500 loan size, coupled with the current business model that's in existence, which I'll talk to you about, it does not make these players much profitable. So, for example, the way BNPL works is you have let's say you have a merchant and a BNPL provider. If a merchant decides to offer a BNPL product, the merchant has to give the BNPL player a certain interchange. It's called the merchant discount rate range. So if typically the merchant discount range is anywhere from 3 to 6%, 8%, right? So 3 to 6% coupled with the average interest rate in the market, which is 19.99 or so, and roughly 20 to 30% bust rates, which is essentially where customers are actually are not going to be able to pay within the 4 to 6 cycles and are going to bust into a traditional installment loan. And the fact that lenders actually make money on interest rates. So if you couple all of these, you find out that typically on an average for a $1,500 loan, or BNPL loan versus a traditional loan, BNPL players make half the net profit versus the traditional POS installment loan. And I have some economics that I talk about in that article. So that's one of the biggest things. And that's why you see like Affirm and Klarna getting into so many other things, right? Because largely there are profitability problems, right? Second is, while all the benefits, it does prompt customers to become much more of an impulsive buyer. So it does, because it's so easy to buy, customers are buying without even knowing that they're racking up debt at the end of the day. And if they are unable to pay, and if they don't have the money, that missed payments can be, in the US at least, reported into the credit bureaus, which can impact their credit scores, and then they can, they themselves, the customers themselves, can be shut off from buying future purchases. It can also be expensive for merchants because merchants have to pay the MDR, which is a merchant discount rate, which is an interchange, coupled with the credit card charges, which is again an interchange there. Coupled with sometimes with some BNPL players, they have to pay a certain transaction fee and some other servicing fee for the BNPL player. So it can become expensive. So that's another mode to keep in mind. And then finally, for customers, it can be a little confusing, right? Because they're buying a product, let's say from a merchant, and if they have to return the product, once they return the product, they assume that their loan is now canceled, but that doesn't happen because the loan is being generated by BNPL players. So that in between all these players can confuse, with some customers reportedly having assumed that their BNPL loan was automatically canceled because they returned the product, and a non-payment resulted in a credit bureau reporting activity, which impacted their credit score and their credit borrowing capability. So that's sort of what I highlighted in that article. But having said that, as I mentioned, BNPL is just storming the market in the US. There's about 300 million or so poured just this last year into BNPL firms, and there's no stopping. It's just growing, and I know in Pakistan also there's this emerging player KISPay, by my good friend of mine who's doing this, Jordan Olivas. They're making some waves. So let's see how that performs. But in any lending business, it's all about how do you manage risk in order to become profitable. So I think that's the name of the game, and that's the secret sauce. As let's say, KISPay also drives traction in the market and generates loan volume. Their ability to track that risk, keep it contained, and become more profitable is going to be the key thing to be seen as BNPL products try to start and scale in the market.
When you talk about the dark side, in my opinion, I believe customer experience usually plays key in any sort of business, right? Customer experience needs to be up there somewhere for any business to work. And I think with regards to the last point that you mentioned about when customer makes a return and the loan has been issued by the BNPL company, and so everything whenever there's some product returns, everything goes hodgepodge during that cycle. For KISPay, yes, KISPay is doing very well in Pakistan. They're expanding into Bangladesh as well. They're actually hiring a team as well for Bangladesh for senior roles as well. Now, fintech, by the looks of it, how 2021 has been, next year as well, fintechs are going to be hotcakes for startups and for disruptions. What do you think are the trends to follow? We are almost coming to the end of time, so this is the last question. I have to squeeze this in. What trends do you think are there to look out for?
Sure. And in 2022, I think it's going to be another remarkable year, blockbuster year. In the US, I see three things that are going to be accelerating in the space. One is this general lending sort of space, payments and lending together. We have BNPL. I think there's no stopping on BNPL. And remember, the context we just spoke about, BNPL, is a general merchant-related BNPL offering, like Klarna and a firm, right? There's very specific BNPL offerings that are verticalized. For instance, BNPL for healthcare, BNPL for education loans, BNPL for home improvement, BNPL for car repairs. Those BNPLs type of solution, or point of sale lending solutions, are going to see some acceleration. And the business that I ran in my previous employer was those specific categories. And those are much more profitable if you can manage, because the loan sizes in those verticals are much more than a $1,500 loan or $500 loan. They can range as high as $25,000 loan. So more loan amount renders along with your traditional interest rate renders more money for the lender. So
Mm-hmm.
that space you have, and so that space is growing. And within the payment ecosystem, you will continue to see activity across sort of in the US. How can the infrastructure element of payments where can be further automated? Especially making payments cheaper and much more faster. The second trend to watch is just this whole ecosystem of embedded finance that I mentioned, right? So, which is the ability to integrate banking products, whether it is a bank account, a loan, a business account, a checking account, or even a wealth product inside the customer flows of a product, of a traditional product. So, for example, you have a telecom product where customers can sign up for three voice and data lines, and they need a loan, for instance, they'll get a loan there, right inside that telecom carrier ecosystem and check out. And then the third one in the US is around crypto and around this whole decentralized finance ecosystem, including NFTs, which are non-fungible tokens. We're just seeing some tremendous activity, and I think this whole space is going to rise and explode in 2022.
With regards to decentralized finance, I think we need to do a separate talk about that sometime on blockchain and NFTs and all that, because that's also a pretty wide topic to talk about. I think we should do that sometime next year. So Safwan, thank you very much for being here. It was really an enlightening experience, at least for me. I hope it is for everybody who sees this. It was great talking to you. Hopefully, when you're in Pakistan sometime in Lahore, I'd love to meet up with you, have a cup of coffee or something, or dinner maybe. Right, so let's stay in touch on this, and hopefully we should do this talk again sometime next year. And from my side, have a great New Year's Eve. Enjoy the party, and we'll speak again soon.
Thank you so much for having me. I hope my thoughts were of some value to your audience, and I'm happy to sort of talk about decentralized finance next year.
Mhm.
And I'm also keen to be plugged into Pakistani fintech ecosystem. So far my involvement has been in the US
Mhm.
and in Singapore as well, and in Europe to a certain extent. But
Mhm.
I would love to sort of be plugged into this into my home country, and see how I might be able to help. So thank you very much. Happy New Year to yourself and also to the audience who are listening,
Mhm.
and wish everyone many successes in 2022.
Okay. Thank you.
Thank you. Bye
Thank
now.
you. Have a great day. Bye bye.